concerned, a lot of persons want to know what next. And today we present to you the answer with our very great panelists here. Every one of them. We have two others joining us, virtually. So please, we're ready for you today. I'm not going to be doing this alone. We're trying to make it as informal as possible, even though it's going to be insightful and it's going to be very comprehensive. We're trying to make it as fun as possible because people learn better when it's fun. True? So if you want it to be very solemn, if you want it to be very serious, please let me see raise your hand. If you want, okay, you want it to be very solemn, all right. Thank you very much. I respect your opinion. Now, if you want it to be very fun, please let me see your hand. All right, the hands. Thank you very much. It's going to be very fun. So we're going to kick off with smiles, and please smile, people. Thank you very much. Yvonne Ohaifo is my co-host today. She's going to be joining me moderating this panel. I and Yvonne, we work for Nigeria Info and we run. Hello? Yes, so I and Yvonne, we host a tech show on Nigeria Info called Digital Life, and we bring you all that fun that we have on the tech show to this very panel session. So, without further ado, Yvonne Ohaifo, ladies and gentlemen, please help out with the mic. So when I started, nobody clapped for you. Well done. Okay, let me help you.
Thank you very much. Hello, everyone. Emmanuel Onwuka murders my name all the time. It's Yvonne Ohaifo, not Ohaifo. Anyway, as he said, we host a show, a tech show, Digital Life on Nigeria Info every Sunday, 11 a.m. to 12 noon. So you can tune in. It's fun, it's interesting, it's engaging. You can tune in. As he also said, we'll be hosting, moderating this panel discussion, DeFi and the Future of Financial Services. And thankfully, we're not doing it alone. We have the beautiful lady to my left and the two gentlemen to his right over there.
All right, so we're going to start off with getting to know our panelists, every one of them. I think we're going to start from the very first person on my right. His name is Gideon Orovwiroro, COO of Korapay. I wanted to elevate you. So he's COO of Korapay, and after him we have Obi Emetarom. I know a lot of you already know him. He's a popular celebrity, as well as he's the CEO of Abzone. Welcome to the panel. And then Yvonne, ladies, thank you very much.
Well, I have Buki. Ogunsakin, please tell me I pronounced that right. My Yoruba is improving, I've been working really hard. Okay. Buki Ogunsakin is the BBO, she's a lawyer, and she works with BBO Solicitors. And then we have Mohammed, Jega, who seems to be joining us virtually.
Yes, he's joining us
Mohammed, if you can hear us, say hi. Okay, he can't hear us yet. He's joining us virtually on the panel discussion today.
Yes, we also have on the panel discussion joining us Sandi,
Bitenc, I guess.
CEO at Debit. Sorry, I'm very bad with names. That's the first thing you notice about me. I'm very bad.
Yeah, right after just when you murdered my name, it's obvious.
Okay, so we'll get straight on into the conversation for today. DeFi. How far have we gone? What's this process been like? We're making progress, especially when it comes to DeFi in Africa, when it comes to Nigeria in particular. Obi, I think you lead first, and then we go to everyone else. Yes, it's good. Just speak into it.
All right, okay, thanks. Thank you very much. Pleasure to be here. Fantastic show. This is, I think we need a lot more of this to create awareness about this paradigm. With respect to where we are with DeFi, I think the first thing is to sort of quickly dimension what it's all about. The idea is digital assets are assets that don't require any physical representation, right? What the blockchain has done is allow that to be a thing. So it sits, the asset itself sits.
Obi, hold on. Can everyone hear him? Can you hear him behind? Obi, you'll have to project.
Okay.
You have to use your mouth voice.
Okay. Can you guys hear me now? Okay, cool. Yeah, I was saying that the first thing is to understand quickly the concept. Just to summarize, that digital assets are assets that don't require any physical representation, right? And that the blockchain has made this possible because it sits in an electronic form, immutable, transferable on the blockchain. What that has enabled is what is called a non-custodial paradigm. Physical assets, because they are physical, somebody needs to hold them. That's why they are physical, right? That's why you have some of the financial institutions that do that. But these digital assets can sit without any custodian, meaning everybody who owns something has and controls their asset directly. So it opens up a whole new world, right? Where those custodians that are intermediaries are not required. And instead, the smart contracts could serve as intermediaries at a much cheaper and faster rate. So that's what DeFi is about, basically. You know, it's a peer-to-peer form of financial services. Now, what we have today in Nigeria and in Africa, you have some limitations to it. One of the limitations is.
I have a question.
Okay.
Obi, you've been saying DeFi. Look, there are some people here who may not entirely understand what DeFi is. Are you talking about defying the rain or defying the moon?
Yeah.
What exactly does DeFi stand for?
Yeah, so that's why I tried to start from. It's decentralized finance. Decentralized finance. So that's what I was defining when I said, you know, we've taken financial services to a level where, you know, it functions directly across the owners of the assets, and you don't have a central authority that leads to it and mediates, right? So what I was saying is that it's exciting because it's much cheaper, right? It's more reliable, right? It's even easier to regulate, right? It's more transparent. There's just so much about it. When we say cheaper, it means cost of, say, accessing funding is much lower, and it also means that return on investment will be much higher. The challenge we see today, a number of challenges to adoption include skepticism because of regulation, challenges that include inclusiveness, having the masses having access to this. You know, so for example, with DeFi today, DeFi lending, you can only access DeFi lending services if you have collateral, crypto collateral. So only individuals who own crypto assets can access lending. But we all know that if you do that, if you insist on collateral for loans, you are going to exclude the bulk of the masses who don't have collateral. So there's a lot of work to be done there. And in countries like Nigeria, where you know there's restrictions on use of crypto assets, then those restrictions translate into restrictions on adoption of DeFi, right? So while you have this massive potential out there, we still have these restrictions that have limited our ability to adopt at scale.
Buki, he has said, while Buki was talking, he talked a lot about restrictions, you know, limitations. But personally, why should I invest in something that I cannot touch? I cannot see? Like, what if something happens and network just goes haywire and my money vanishes? In fact, to drive this home, right? Some time ago we had a guest on the show, Okoro, I've forgotten his first name, it's me. He talked about how he had bought a lot of Bitcoin, he had bought a lot of Ethereum, running into thousands of dollars. And then something happened along the line, and he woke up one morning. His phone was connected to his computer, and that kind of thing. And then the next thing that happened, he just saw his assets moving. Like he could see the Bitcoin. Everything was just moving fast, but he couldn't do anything about it. So if people are, you mentioned limitations. So if people are a bit skeptical about investing in something that they cannot see, that people tell them, oh, it's valuable. Doesn't it beat the whole, what's the word for it now? Doesn't it beat the, English has failed me now. The purpose, thank you. Doesn't it beat the purpose of DeFi? If it's decentralized finance, it should be, in as much as it's decentralized, I should have some faith in it. But if people's monies are vanishing up and down, what do you say?
So, an honor to be here today discussing this wonderful topic. Okay, I have to project. So DeFi is a game changer, just like Obi, alluded to. It's decentralized finance. We are used to centralized finance, right? But this is now taking it into a different area where, number one, there's no need for a middleman. So you basically become your own custodian, just like, or you at least have the opportunity to. So you own your own assets, you can hold, the security keys to your assets. You basically control the ownership and how you use your assets, basically. And this is a game changer for Okay. All right. So it's a game changer for us because now anybody can own assets. Basically, if you have a device that can access, the internet, and this is both a two-pronged approach, right? Because the same way people can have access to it, just like she said, is the same way you increase the risk. That means you can have what they call them, illegal people and bad elements, bad actors in the space who are ready to take advantage of people, which is the reason why we need regulation. Regulation is necessary because if we leave the space as is, many people are going to be taken advantage of, unfortunately. So even though it's an opportunity for Africa to leapfrog, even though it's an opportunity for the layman, the regular Joe on the road to be able to have digital assets and make money, there are security risks that are very high, and that's the regulatory aspect, of DeFi. But let's concentrate more on the advantages, right, of owning assets. Why is this very important? Previously, before now, the regular Joe on the road, how does that person access US dollars? It's way more difficult. But right now, with a device, just an Android device, you can actually access USDT. You can make a living. You can earn this cryptocurrency, and you can actually have it converted, to Naira. Listen to what Fehiro was talking about, Patricia business, where you own your own business, and then you're able to deal with somebody in Cyprus, in Paris, and you have somebody in Balogu markets, and you're able to earn, and this money is able to convert to money that you can actually use. That's a game changer. It's an opportunity that we never had previously. So I think we should concentrate more on those aspects, and then probably regulation can catch up. There can be collaborations within the space to help regulation, and then when regulation gets to that point, it now begins to help us to regulate the space and to get rid of the bad elements in the space. That's what I think.
That's very great, very, very great and insightful comments there, Buki. Mohammed Jega is here with us. Can you hear us, please? Can you hear us? Please say something.
They seem to be muted.
Can you hear us? Can you hear us? Mr. Mohammed, can you hear us? Well, while we're trying to get him, I wanted to ask a question specific to him because he has been pushing his brand here and they've been making a lot of progress. And I wanted to know how he has been able to do that, regardless of the limitations that are in the blockchain space, just like Obi had earlier stated. But Gideon is here with us. Gideon Orovwiroro is the CEO of Korapay. So have you been able to make progress, especially with the slow so to speak, slow adoption rate, especially here in Nigeria? We're not where we want to be yet. You understand? And we have a lot of challenges. Just like Buki had said, we have to look at the advantages. People are coming up with solutions every day, but then and again, we are in a system that has been on for so long. Anything that is going to be disruptive, they see it as a challenge, as a threat. You understand? So how have you been able to stay on your game? How have you been able to continuously progress, with all these limitations?
Okay, can you hear me? Okay, great. All right, can everyone hear me? Can everyone hear me? All right, perfect. Thank you so much. It's great to be here. So we at Korapay is regulated under the Central Bank of Nigeria. So we only operate within permissible activities within Nigeria. However, we also have multiple licenses across multiple markets, including North America, the UK, across Africa. And so that's why crypto, Defi is particularly interesting and exciting to us. I think that one of the reasons why the regulators have sort of taken a combative posture against crypto is that many a times the phraseology of crypto itself is combative. But when we begin to separate the hype, when we separate the hype from the utility of crypto, we can begin to see the advantages. And one important way, for instance, that she mentioned was sort of like that inflation hedge, and currency, basically protection against currency devaluation. From the payment standpoint, one thing I'd like to reiterate is, for instance, online settlement. One of the things that we're beginning to observe in the global market space is that Nigeria is becoming increasingly a high-risk market. So, for example, when people want to send funds from the United States into Nigeria, they're having a lot of difficulty. And so it's causing a lot of, reduction in the speed of settlement, etc. And even when businesses in Nigeria want to pay out of Nigeria, it's becoming increasingly difficult, obviously, because we have FX scarcity. And that is a bad signal to the international banking community. So it then begs you to wonder what happens when the international banking community begins to shut, payments out of Nigeria off. And for the regulatory authorities, you begin to see cryptocurrency, DeFi, as an alternative and very solid solution for settlement. Because right now, we basically can take Naira and then convert it into stable currency, and you can settle your merchants outside of the country, cross-border payments, and it is literally done instantly. So those are some of the use cases that are beginning to show up in terms of cryptocurrency, the blockchain technology, etc. And it's becoming increasingly useful. Obviously, access to FX through USDT. So now the central bank, for instance, has had issues with FX scarcity. And, everybody is complaining about the Naira, right? Probably the Naira has probably fallen since when we started this meeting. And the interesting thing is, if Naira is feeling the full demand of the pressure of dollars, the Naira will even find that it is actually overvalued, because a lot of people have found alternative ways through cryptocurrency to actually save their money and then, basically not go to the central bank to get FX. So, in that way, in a way, technically, we can say that cryptocurrency has probably helped the central bank. I know they've tried a bunch of things. Not everything have probably had the effect they should have had. But even just cryptocurrency, seeing that it has taken some of that demand from the central bank, it's probably why we still have Naira at 745, 750, whatever it is now. So they are really, really, really solid use cases. It's just that the phraseology for which, that is being put to central banks, it just has to be really clear so that we can separate the utility from the hype.
Right. I have a question.
Sure.
The whole, you mentioned FX and doing business, right? And everything just sort of speaks to a certain class of people who can access these, that have access to this kind of business. For instance, now you mentioned FX. It's probably the person in the middle class who does importing and exporting, that could, most likely enjoy that kind of service. Now, let us bring it down to the grassroots. So the people in the market that sell pepper, that sell tomatoes, that sell bags, just those regular ones at the market that say, na mumu they go boutique,
Sure.
Good. So how exactly does DeFi, right, serve those people?
All right, that's a very, very good question. So the fact that the low income don't necessarily get FX doesn't mean that inflation costs don't pass through to them. And it's very important. Now, when there is FX scarcity, for instance, when businesses cannot access FX and get input and raw material, what you're going to do is, obviously, as the Naira begins to fall and then getting dollar is harder, they begin to pass that, it's called an inflation tax, to the lower class. So you find a sachet of Milo that's supposed to be 10 Naira, all of a sudden is what? 50 Naira. A sachet of peak milk that's supposed to be what? 15 Naira becomes 50 Naira. It's the poor, many a times, that are actually at the receiving end and at the brunt of, not being able to access many of all these services. Now, I can go on to say how we can utilize the current financial infrastructure to push DeFi, but that assumption that it's only the middle class, maybe that DeFi works for, is not true. What they are is hidden costs are being passed over to the middle class. And, the average person is complaining because food is expensive. Well, how are we getting food? How are you getting your tomato sauce? Nigeria doesn't produce anything. It's because the companies that produce those things have now pushed the cost over to the low-income customer, and now it's really difficult, for them many a times to survive. So we are all feeling it. Some people are seeing one head of the monster, other people are not, but the monster is still there.
Okay, Emmanuel. Gideon, you tried, but something is still very, Obi, tell me, right, how DeFi will help, he mentioned the other class, the people who buy these services, the people who sell, the retailers, for example. How will DeFi help such people? For instance, a lady who does business online, sells shoes and stuff online. How will DeFi help her? How will DeFi help the person in the market that sells tomatoes? I'd like to know so that, if we're pushing for financial inclusion, right, we cannot ignore that set of people.
Okay, good question. Now, in AppZone, in our company, we usually say that a fully digital payment economy, which is like a cashless society, is a fully financially included economy. And I'll explain why. When you have full digital payments, it means that everybody's monetary assets are in digital form. That means they have an instrument to make payment. They won't pay with cash. So essentially, everybody has an account. In DeFi and digital currency, it's not a traditional account in the sense of fiat, but it's some form of instrument through which the individuals that have that instrument can access different types of financial services. So the first thing is, with digital payments, things like settlements, ability to receive money from any part of the world become completely seamless for that seller from anywhere. So that's the big thing. The ability to procure things from any part of the world become really seamless. But that's just one. Access to facilities for business becomes really, really seamless. What digital transactions do is that they leave a trail that can be used as a basis for lending. In DeFi lending, it is further improved by, like I mentioned, the cost. So with DeFi, you don't have the layer, the central financial institutions that sort of nudge up the. So I give an example, and I'm not saying this to take away anything from any of the existing financial institutions, but if you fix money today, I mean savings accounts, how much? What's the interest rate? I don't know, 2%, 3%. Okay, per annum, yes. And then lending rates. What are lending rates? 20. Yes, you have 15, 20, 25. It can go up to 30 and 35. So if you take an average of 25%, for example, there's a spread, right? A huge spread that makes access to those facilities and the ability to use those facilities really a challenge, right? So that lady sitting there would be able to drastically reduce the cost of lending and access to the pool of funds to lend, right? So you see, a combination of a cashless era powered by digital currencies and DeFi, where everybody has an instrument that gives them access. They can send and receive money from anywhere in the world, and they have very low cost of lending and high ROI. So rather than just getting 2% on savings, you see that the yield goes up, can go up to 10%, 15%, depending on what kind of service. And then the innovation, the types of financial products that exist in DeFi. DeFi is very collaborative and very innovative because it's not restricted. In traditional finance, the ability to innovate is restricted to the institutions that hold those assets and the individuals that work there, right? So they operate by default in silos. With DeFi, it's open. By default, blockchain is open, and any innovative fintech startup or individual can build automated financial products that utilize those assets. So you have a myriad of different types of products that address different specific needs of target customers, right? So yeah, it's like a whole new world. It's a whole new paradigm. Yeah.
Okay. Before we go further,
we'll
can
take
have
questions. Emmanuel.
Mohammed Jega. We have Mohammed Jega joining
great.
us right now. Mr. Jega, can you hear us? We have Mohammed Jega right here. Can you hear us? We want to make sure as much as possible we're able to take all the panelists along.
While we're waiting to connect to him or pray that he's able to hear us, let's take a few questions from the audience. Can we do that?
Yeah, sure.
Yes,
If you have a
signaled to
question,
me
please
before.
just raise your hand. Others you can write down. I think I saw first.
Okay, I saw this lady.
Okay, so that's
ladies first, Emmanuel. Ladies first. Thank you.
Please, ladies first.
All right. Do I need to do an introduction? Okay, so my name is Joy Alabiunde, right? I currently head people and operations for Apex Network Limited, and it's a crypto fiat exchange. So I do understand DeFi, right? And you actually hit the nail in the head when you say DeFi is meant to enhance global commerce, and that's the basic underlying factor of DeFi, right? So that's why I'm asking this question. Back to her. I didn't get your name. I'm so sorry. Okay, so where do we balance the need to have regulations with DeFi? Because the purpose of DeFi is to remove the bureaucracy that comes with a lot of money moving globally, and that has made a lot of currencies almost insufficient and almost not usable for you who have a global audience and you have a global client and global.
Hello, I can't hear you.
You're doing commerce.
I can't hear you guys.
Okay, you're
been
doing
here
commerce
for over-
globally. Do
Mr.
you understand?
Jega, can you hear us
So
now?
if we begin to bring in regulations, because I feel like there's a lot of bad people, like you said, in the business, yes, because it's very, very technology dependent, and anything that is technology dependent will have its loopholes. Even the fiat as the fiat currency is a lot dependent on technology. It's just that there are a lot of people involved in it that reduces the risk. Everything finance has risk. So when we're bringing in regulations into decentralized finance, which actually was built, because cryptocurrency, as you know it, is just part of decentralized finance, but it's one of the fluid parts of decentralized finance. So when you bring in regulations into it, how do we manage so that we do not lose the essence of decentralized finance?
If I remember what Obi said it makes regulation easier. So let's hear Buki.
Herein lies the issue, where regulators are having a hard time regulating the space. Okay, so this is how I break it down, being in the legal profession. There's traditional finance, which is TradFi. There's CFI, which is centralized finance, and then there's DeFi. All right? Traditional finance is legacy finance as we know it. Then decentralized finance is on the other side of, immutability and all of that. CFI, on the other hand, is where you have traditional elements but on Web3 platforms, right? On a Web3 platform, but is not completely decentralized. How you now determine, the level of decentralization of the organization on this, what we call a continuum, is where the regulators have an issue. So with the completely decentralized finance platforms, DeFi platforms, is very tough to regulate because even though it's immutable, the whole essence of being decentralized is the fact that you are removing the central party. So a regulator as a central party, how do you play in this, space? So for CFI is easy. Regulators have brought in KYC, AML, even for the decentralized parties to say you need to know your customers, you need to get certain information from them. There's a FATF guidelines, that guide you on how to go about governance within this space. But what I would recommend, okay, for regulators is that regulators need to innovate to become slightly decentralized. How this will happen, we don't know yet. We are still in early days, but it's where I believe we need to get to. I'll give an example. I always give this example of the New York Supreme Court. There was a case of someone who had hacked into a system and they needed to serve papers on the parties, but they don't know who the parties are, right? Because they are anonymous. We only have the wallet addresses. So what the court did was to innovate and come up with what we call service tokens. So they now airdropped the service processes as an NFT to the addresses of the defendants. When we are looking at this, you can see that the regulators or the court system in this particular circumstance had to innovate. That how do we get these processes to these defendants? We need to let them know that they're being served and they need to appear in court. But how do we go about doing it? So they brainstormed and came up with this particular innovative way. And I know that even in the UK now, they are adopting that particular process to serve papers. So this is what we're talking about, where we're saying regulators need to first, that's why they need to understand the space first. When we understand, then we can begin to regulate for the space without stifling, like how we normally call it, or because if you stifle innovation, is either people move abroad, because we see that many of the registrations now, people are going abroad to register their companies, or you reduce and stifle innovation. And we don't want any of those two. So we now have to sit down with experts and work, around these traditional laws that we have to begin to innovate in new spaces.
Okay, we're going to have Mr. Mohammed Jega join us right now. Can you hear us now? Can you hear us?
One more question? Okay.
We had that gentleman raise his hand first.
Hello. Hello, my name is Ola Onoshile, and I'm a lawyer Ola, I might have to ask you to stand so that we can get you in camera. Thank you.
My name is Ola Onoshile, and I'm a lawyer. My question is with respect to taking loans on decentralized platform. I can imagine.
Please speak up, Ola. Use the mic very well.
My question is with respect to getting loans, obtaining loans. You mentioned the disadvantages of reduced costs, but I'm having trouble imagining how you would make that contract work. Are you using smart contracts? How do you enforce? And how does that work?
All right. Before you answer that question, let's field another question so that, yeah, thank you.
Okay, my name is Adekunle.
Please protect Adekunle.
Okay, yeah. So I actually wrote my questions down because I actually organized a space on Twitter as at October 30th talking about independence and how blockchain can actually, improve Nigeria's economy, right? So the question I raised was, we don't have absolute decentralized finance yet, and I don't think we can actually have that because even the platforms that claim to be decentralized are actually, created by someone who has the power to, either shut down, like Solana does that a lot. So I said, in order to, promote mass adoption in Africa, in Nigeria, is there a way we can actually, enforce decentralized finance without, passing through all the regulations? That's my first question. So the second question is...
hello, can you hear me?
So the second question is, DeFi comes with 3 trilemmas, which is, the decentralized part of it, scalability and...
Can you hear me?
Security, right? And
yes, we can hear you.
So far, there's no platform, no blockchain, no ecosystem that has actually,
But I can't hear you guys. I can't hear you guys.
And okay, the more decentralization, comes, the more risk we have. So, is there a balance between these 3? So that's my question.
Were you able to get the question?
I got the first one, but the second one.
Okay, you may have to repeat the other questions.
But
Just hold on. I think what we can do is answer the one you can hear, and then we'll come back to you.
Yes.
Okay?
Okay, so let me address the question. I'll just recap. The question was, with DeFi lending, how do you sort of guarantee, like how would it work, right? And there are different ways. So if you take the way TradFi works today, lending, there are 2 types of lending. There's collateralized and there's non-collateralized, right? The idea is to secure the lender who brought the money, right? No matter what happens on the borrower side. Now, with collateralized, you place collateral and you take the loan. If you default, your collateral is liquidated. So you have a similar process. I'll start with that. On DeFi, today, collateralization is happening with crypto assets, cryptocurrencies. So you over-collateralize. The smart contract holds a portion of your Bitcoin or your Ethereum or whatever to a quantity that is more than what you took, right? So that if you default, and that the smart contract can automatically sell those assets on an exchange so that the lender does not lose money, right? So that's the simple way it works today. But it's limited, right? There are ways that collateralized lending on DeFi can be expanded. So for example, collateralization of securities, like debt securities, equity securities, right? On the blockchain. So people who have those kind of securities can place them, and those things can also be liquidated on decentralized exchanges. So that's one. So tokenization of physical assets. So like physical asset NFTs, where you have like fractional real estate or fractional, you take a physical asset and make a token out of it, and you can fractionalize it in a way that many people can own part of that asset because they own the tokens. And those tokens can be used as collateral in a way that decentralized exchanges can liquidate those things, the same way, right? It's not here yet, but that's the next phase for collateralized. Now, if you come to non-collateralized, there are a number of ideas. We are working on some of these ideas. There are three things banks do, right, for non-collateralized loans. One is they assess the credit, your creditworthiness. Two is they collect the money back, right? And three is they underwrite a loss. That means if after they've assessed your credit, you didn't bring collateral and they try to collect the money and they couldn't get it, they pay back from their profit so that the depositor who owns the money does not lose money, right? There are ways to replace these three things with automated systems. Today, I'm sure you know, we now have automated credit assessment systems that do credit scoring, right? Based on machine learning, and they use data to predict likelihood of repayment. That's one. You also have cutting edge systems for collections. There's this new type of systems called Universal Direct Debit, where you, based on your ID, a system can reach out to wherever you have a balance and collect the money. Of course, subject to your mandate. So that takes over. The third thing, which is underwriting. So what if after this, you still can't get the money? You can't tell the lender that his money is gone, otherwise he won't participate in that thing. So who underwrites the loss? Today, you have insurance, potentials for decentralized insurance that can charge a premium to the borrower, yes, right? And the way insurance works is that you accumulate premiums, and then if one goes bad, you pay from that premium. And they do the actuarial science around it and decide what to charge. So when you combine automated credit assessment that can be run through smart contracts, universal direct debit that can be initiated through smart contracts, and this type of decentralized credit insurance, again, they can be initiated through smart contracts, then you have an opportunity for DeFi lending to be expanded into non-collateralized market segments so that you get a bigger level of inclusion. These are kind of like where the thing is going. It's not here, but that's where it's going. And we're going to get there in no due time.
Yes, I wanted to add just a little legal aspect to that and say, aside from the smart contracts, you can actually have a written contract attached to that particular smart contract. And the written contract can actually give recourse in physical court. So we've had a case where there's this particular instance that the person's board ape was seized, liquidated because he did not complete the loan, and he went to the court because he had a contract with the particular company attached to that smart contract, which stated that other methods should be recourse to first prior to selling the board ape. But the organization went ahead and put the board ape on OpenSea for sale since he had regnated on his loan. So there are actually contracts that you can add to that. It can be encoded into the smart contract or attached as a file, IPFS somewhere. And then there's decentralized justice as well, where if the particular platform is signed up to decentralized justice arm, they would be the one to hear the matter and then judge. So they have a particular system that rolls with that, and whatever verdict, the terms are put in a smart contract, and whatever the jurists, vote in, would take care of the judgment, and then the smart contract would fully automate and enforce the judgment for the particular parties in that circumstance. So I just wanted to add that part for you.
We're going to be taking more of your questions because this is supposed to be an engagement. So let me see your hand, but you might have to step front. We took your question before. No, okay, so please come forward. Come forward.
Oh, yes, a pending question. The gentleman.
Oh,
okay, yes.
So come forward.
Yes.
Come forward first,
Please
then we'll
come
take yours
forward.
next. Come forward first, then we'll take yours next. We have to get you on camera. Very lovely clothes, so let it not waste.
The first question was on regulation related. You were asking about regulation.
Yes, I was talking about how we can actually regulate.
I can do it.
Okay. I was talking about.
Yes, that's loud.
Okay, I was talking about how we can regulate DeFi without actually removing the essence of decentralization in it, and that was my first question. So, and the second question was the three trilemmas that comes with DeFi, right? That's the security, the scalability, and the decentralization part of it. So, which is not has not been achieved by any platform. So, is there a way or is there a balance between these things? That's my second question.
Okay, so let me just take the first one, then the other panelists can take. My belief is, just like Buki said, so today it's very difficult to regulate DeFi with the public chains, because of how they are designed. There are key elements of regulation: KYC, AML. If somebody says it's a stable coin, right? How do you know that this stable coin is backed by dollar? How do we know that is backed by dollar, like backed 1-to-1, right? If everybody wants the stable coin, so okay, I want my dollar back, will the stable coin be able to pay back? And we saw what happened with Luna and all of that, So there are basic elements on DeFi lending or any of the other protocols. There's this thing they call rug pools and all that, where people can embed fraudulent operations into the smart contract that says that at some point, just take out everybody's money and run, right? How do we know? These things are open source, but not all of us can read a smart contract code. You need to understand code to do. So that's where regulation comes in. Now, my view is there's a type of blockchain setup that can actually make DeFi regulation easy, really easy, like easier than even TradFi. And I'll tell you why. Smart contracts are immutable, you guys know. Blockchain is immutable. Any content on blockchain is immutable, whether it is data or code, right? So it means that if you screen, and DeFi process runs on code, it's code that runs DeFi process, unlike TradFi where it's human beings that run it. If you screen a piece of code that is a smart contract, once you deploy it and it's doing a certain thing, it can't change. It can't change. Number one. Number two, you know what it's doing. It's transparent. In TradFi, people's minds are not transparent. And even though you have audits, right, or quarterly audits, financial institutions can arrange themselves for an audit, and immediately after the auditors leave, they go back to what they want to do. Yes. With DeFi is different, because you can have, for example, there are a number of ideas. People at the cutting edge of thinking about this. There are a lot of ideas where a smart contract to run a DeFi service runs through a quick review process that at least ensures, not to see whether it's effective, but at least to be sure it is not malicious, right? And it's deployed. It will work that way. Visibility from regulators, seamless. Access to, so there are ideas around KYC on the blockchain that can be enforced, right? AML that can be enforced in ways that the developers, as they innovate, don't have to worry about that part. There are ideas, frameworks around how platforms can enforce ways that if you issue a stable coin, there's a process to ensure that the asset backing the stable coin is 1-to-1 for that stable coin, so that the consumers are protected, but in a way that is not intrusive to the innovators that are building those solutions. So the solution to this is in the framework itself. It's in the blockchain frameworks themselves are going to evolve to incorporate these sort of automated forms of regulation that abstract the concern of the innovator, so they don't have to worry. So my answer to you is that the way it will work so that regulation does not encumber innovation on the blockchain is that it's going to be mostly automated. It's not going to be like kind of regulation you have today. It's going to be baked in and compliance built into those systems in a way that is not intrusive to the tech companies and the sort of service providers that are building those innovative smart contracts. Yeah, so it's a whole, we can have a whole lecture on it, but because of time.
Yes, so I'm just going to add again to what Obi is saying. Another example is privacy, right? So many of us know that we say the issue with CBDCs is because the government is going to know what we're doing with our money, right? And we have privacy laws that say, you know, your personal data is not to be shared just, you know, like it used to be. There are certain rules and certain principles that need to be followed. So again, like what we're saying, regulators need to innovate. They need to automate some of these systems. We actually have what we call ZK proofs for privacy, where instead of accessing the information of the user, you know, who has come onto the DeFi platform, you can actually have that embedded in a system. And, you know, what the regulators would do would be to send the information to this system. System A will verify that you are the right person because that system has, you know, collated all your information together, but it's not going to reveal that information to any party, but will be able to verify that you are the person. So all the information the regulator needs to know that is this person A, and that system is able to, you know, verify that you are the person without revealing any information, and then sends it back to the regulator. So many of these things can actually be automated. But again, we need to sit down, you know, and look at these processes and see how regulation can begin to regulate this DeFi space, or, well, depending on the level from CeFi to DeFi that the organization is on, there are many remedies, you know, that could be available in this space.
And he asked very quickly, you know, he asked 2 questions. I remember he talked about the trifecta of scalability, trilemma of scalability, decentralization, and security, and how to balance that out. I'm not sure if everybody understands that, but maybe I can do a quick recap. So what he's saying is, in blockchain, you can only have 2, right, by default. So you can have decentralization and security. If you have decentralized security, what you need to do to make the decentralized platform secure will make it slow. It won't be scalable. You can have scalability and security, right? But it won't be decentralized. And you can have scalability and decentralization in a way that is not secure, right? So, but the answer to the question is about how to balance those things is technology, is tech. Technology has advanced significantly. So I would say that when you say systems have not achieved it yet, not really. Not really. The modern sort of consensus protocols and modern ways that some of the layer 1 protocols operate are cracking those things. You know, we run a layer 1 protocol called Zone, and we are cracking some of those issues with different types of consensus. Different from what happened was originally, in short, what you said holds true with a particular type of consensus protocol. Do we know which one it is? Proof of work. That's the inefficient one that is, you know, has these issues. But the newer consensus protocols kind of begin to address these issues, and it's getting better and better. I can say from what we are doing on our platform, which, by the way, also is plugging in some of these issues we talked about how to make regulation easier, how to make DeFi more inclusive, some of those things, you know. So there's a lot of work going on at the cutting edge of this new paradigm. You know, we'll begin to see the results of these things in the next, say, 2, 3, 4, 5 years to come. So just real quick on that.
Now we might have to wrap up right now. I know a lot of persons have questions, but we have to wrap up. The time is fast spent. We have to go back into our regular sessions. But before we go, let me just have the panelists, you know, everybody just give an overview of what we're going to drop their handles. They're going to drop their social media handles so that you can engage them online, you know, ask them questions, go to the DM. You can start, when you get to the DM, the first thing you can put out there is TechNext conference. You know, I heard you speak at Techno conference. Probably that way they can respond to you faster and respond to your questions. But let me just have the panelists.
Okay, so my last words would be that DeFi promises to change our lives in Africa. We should embrace it. Regulators should help work with organizations in the space to begin to automate and innovate in the space. Also, I would like to let people who are in the space trying to create in DeFi know that you can actually still try to ensure your business works within the traditional regulation, right? That's the first point of call. Try to make it work within the traditional regulations that we already have. But where you have the gray areas, then we can begin to, innovate on what other processes and governance models and frameworks that we can use in those particular areas. Thank you.
Let's hear from Gideon. Gideon has been quiet for stretch.
Yeah, they were speaking. I think what's very important right now is DeFi promises to be a game changer. And usually when people use that word, they say like a trending fad. But the reality is that the removal of the middleman and where we can have easy peer-to-peer transactions, I think is going to solve phenomenal problems. I think one thing is industry players need to do a better job in engaging, sensitizing. Sometimes when we throw around all these really big terminologies, it's easy for it to fly by people's ears. And then the most important thing they're asking for is how does it benefit me personally? And it's also important, to also, sort of turn to the practical use cases. I think for every single stakeholder, for regulators, DeFi promises to, create a lot of advantages for a system that is currently broken. I think for consumers, through, for instance, remittances, loans, insurance, even pensions, some of the really innovative things that are happening around DeFi, I think is going to have better penetration for them because obviously not just that it's cheaper, but it's also because you're finding that those are the kind of needs. It speaks particularly to the consumer needs, things that traditional finance and centralized finance hasn't really sort of tackled. And then you also have industry players too who are looking to sort of build a reputation for themselves by, creating innovative products on the DeFi space. So I think the most important thing is sort of speaking in a language where everyone understands and then taunting the practical use cases. And when we begin to see the potentials and possibilities in DeFi, I think we'll realize that there's something great about this technology that can create great value.
Okay. All right. Thank you very much. I'll start by thanking the audience here for their interest in this new area. It's something that we're really passionate about, and we think that it's very important for transformation of the industry. I would like to also encourage the audience, people in the audience who have this interest, start thinking about, like you mentioned, the next generation of innovators for this space. I remember, I don't know, who amongst us will remember, but I remember when banking as we know it today was not a thing. You didn't have all these banks. Maybe you had one or two government-owned banks, and if you remember, there were actually ads for people to keep their money in the bank. It was. When I think about it now, it's crazy. Like jingles, because it was a crazy thing at that time. People didn't like, I'll take my money and give somebody to hold. Today we take this paradigm for granted, but it was, and today we have banks and all that. But that was partly because that generation of innovators, some of the people you know today, like Tony Elumelu, for example, or Jim Ovia, or Aigi Mokede, came out and they kind of opened the place up, right? Through innovation and through enterprise. We need the next generation of innovators for this new paradigm, right? So my encouragement is for people to, starting with interest and learning about it, what it means, how it works, and then moving to the next level of really creating innovative, dynamic products that can be deployed on platforms like this to sort of unlock this potential, across Nigeria and the continent. So thank you very much.
Thank you so much for your time. And please, panelists, give out your social media handles so that they can engage you sometime.
Sure. All right. Okay, thank you. It's for Twitter, it's Obi Emetarom. Twitter, LinkedIn, the same thing. Obi Emetarom, LinkedIn as well.
Yeah, for Twitter and Instagram, the same thing. It's at Gideon. That's GIDEON OTEGA. at Gideon Ortega. So on both platforms, yeah.
LinkedIn and Instagram will be Buki Ogunsakin, Buki, then my last name Ogunsakin, and Twitter is BUKIOG.